Get ready because the news cycle is spinning faster than ever, and today we've got updates that are absolutely going to blow you away. From market-shaking surges to game-changing breakouts, we're diving deep into the stories that everyone will be talking about. Buckle up, because you're about to get the inside track on what's moving the needle. Let's get right into it. First up, we're tracking a massive surge in a major player in the electric vehicle space. This company's stock is catching fire, soaring in pre-market trading and building on significant gains from the previous day. Investors are clearly regaining confidence in the clean energy sector, and this stock is leading the charge, potentially breaking free from a long period of consolidation. Is this the start of a major comeback? We've got the details. Then, we're looking at another incredible move from the same EV giant, this time smashing through a critical long-term technical barrier that's been holding it back for almost 2 years. With momentum building and indicators flashing green, is this the breakout that bulls have been desperately waiting for? We break down the charts and what it means for the future. Next, we've got a story that's pure validation for patient investors. One particular stock has exploded a staggering 45% higher in just 2 weeks, turning a bold trader's prediction into a market reality. We explore how this massive rally unfolded and whether it has the staying power to continue its upward trajectory. And finally, we're asking the big question: could this Chinese EV powerhouse nearly double its value? With a recent breakout and eyes set on a significant long-term target, we analyze the technicals and market sentiment that suggest a massive rebound might be on the horizon. Don't miss these essential updates. Hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat. Market surge alert: NIO stock ignites pre-market gains. Electric vehicle stocks are experiencing a significant resurgence, and Chinese EV manufacturer NIO is at the forefront, demonstrating impressive pre-market performance that has captured the attention of investors worldwide. As both institutional and retail investors increasingly pivot back toward growth stocks within the clean energy sector, NIO's recent price action indicates a potential breakout from its extended consolidation phase. The broader EV market is showing renewed optimism, leading traders to closely monitor whether this positive momentum can be sustained throughout regular trading hours and translate into significant long-term gains. NIO shares have been making substantial waves in pre-market trading, climbing to an impressive $5.89, marking a solid 6.3% gain before the opening bell even sounded. This upward momentum follows a particularly strong trading session on Tuesday, where the stock closed at $5.54, reflecting a substantial 9.3% increase. According to commentary from a prominent analyst shared on X, this recent rally has already drawn considerable attention from traders and market observers, underscoring a palpable sense of renewed optimism pervading the electric vehicle sector. This renewed investor interest suggests that the market may be reevaluating NIO's position and future prospects. The Chinese electric vehicle manufacturer appears to be directly benefiting from a broader shift in market sentiment that is increasingly favoring EV stocks. After enduring months of relatively stagnant sideways movement, punctuated by periods of notable volatility, investors are once again showing a growing appetite for companies operating within the electric mobility space. This renewed enthusiasm could be driven by a combination of factors, including advancing battery technology, increasing global demand for sustainable transportation, and supportive government policies in key markets. What stands out in NIO's current trading pattern is the sustained and robust buying pressure that has been observed. This is not merely a fleeting, one-day price spike. Rather, it represents a developing trend that strongly suggests institutional capital may be beginning to flow back into the sector. Such inflows are often a precursor to more significant and sustained price appreciation, as they indicate a higher level of conviction from major market participants. From a technical analysis perspective, NIO's stock chart is currently telling a compelling story. The noticeable increase in trading volume that has accompanied these recent price gains is a key indicator that technical analysts eagerly look for. This elevated volume suggests that the current move is backed by genuine conviction from buyers, differentiating it from speculative trading activity. It implies that there is strong underlying support for the upward price movement. The recent break above the $5.50 price level is particularly significant. This particular price point had previously acted as a notable barrier, serving as both support and resistance in recent weeks. Clearing this level convincingly opens up a range of interesting possibilities for further upward movement. Traders are now keenly observing the $6 psychological level as the next potential target, with many anticipating a test of this important resistance point. Market chatter originating from various trading communities highlights that a confluence of favorable technical setups has aligned for NIO, creating what many participants perceive as an exceptionally attractive entry point. The combination of volume confirmation, the breaking of key price levels, and positive market sentiment has led many to speculate whether this could indeed mark the beginning of a more sustained and significant rally for the company. The strong pre-market action observed is a clear indicator that the positive momentum generated during Tuesday's session is carrying over into the current trading day. This continuation often signifies that the underlying buying interest is genuine and sustainable, rather than simply a result of short-term positioning or speculative trading. Hold on tight because the story is far from over. Next, we're diving into how NIO just smashed through a critical long-term barrier, and the implications for bulls are massive. NIO breakout, bulls eyeing a major technical victory. In a move that has traders and investors alike scrutinizing their charts, Chinese electric vehicle manufacturer NIO has delivered a performance that suggests it might be breaking free from a significant technical resistance level that has capped its price for nearly 2 years. After a prolonged period of consolidation and volatility, this latest surge could signal a pivotal shift in the stock's trajectory, potentially igniting the kind of rally that optimistic investors have been anticipating. NIO's stock price has experienced an explosive surge, climbing approximately 25% to reach the $6.10 mark. This impressive ascent has seen the stock decisively break above its 20-month simple moving average, SMA, a key long-term technical indicator. According to insights shared by trader at NIO, the stock cleared this significant hurdle, previously at $4.70, with remarkable ease. This is not a minor technical event. The 20-month SMA has acted as a persistent ceiling for NIO's stock price for a substantial portion of the last 2 years, making its breach a highly significant development for market sentiment and technical analysis. Adding further intrigue to this breakout is the current market environment as reflected in technical indicators. The Bollinger Bands have been observed in a tight squeeze, a pattern that often precedes periods of significant price expansion, suggesting that a substantial move was potentially imminent. Concurrently, the Relative Strength Index, RSI, is positioned at 47.54. While this indicates building momentum, it also suggests that the stock is not yet in overbought territory. This leaves considerable room for further upward movement before any potential overheating concerns arise, which is a positive sign for sustained gains. For the bulls who have endured years of price declines and market disappointments with NIO, this technical breakout offers a powerful sense of vindication. It represents the first tangible evidence in a considerable time that the longer-term trend for the stock might finally be transitioning in their favor. Such breakouts often attract further buying interest as market participants recognize a potential shift in underlying strength. The immediate challenge for NIO lies in overcoming the upper Bollinger Band, currently situated around the $6.36 level. This band could act as a short-term resistance point, potentially leading to some profit-taking if buyers cannot push through with conviction. A failure to break decisively above this level might result in a pullback, offering an opportunity for the stock to retest the recently established support levels, including the broken 20-month SMA. However, the broader technical picture remains compelling. The long-standing downtrend that has pressured NIO's stock for years appears to be showing signs of a breakdown. If buyers can maintain the current upward pressure and successfully hold the stock above the critical $4.70 level, This could indeed mark the beginning of a legitimate and sustained trend reversal. Such a reversal, if it materializes, could unlock significant upside potential for the stock. The technical setup strongly hints at the possibility of larger price movements in the future, provided the current momentum is sustained. For a stock that has experienced such significant price depreciation over an extended period, technical breakouts of this magnitude can often catalyze sustained rallies, particularly when accompanied by improving fundamental factors or positive market sentiment. But will this momentum hold, or is a pullback on the horizon? Get ready, because we've got news on how one trader's bold call has already played out spectacularly, with this stock jumping 45% in just 2 weeks. NIO's explosive rally. A trader's prediction comes true with 45% surge. In a remarkable display of market timing and conviction, NIO's stock has delivered a stunning performance, skyrocketing by an impressive 45% over a mere 2-week period. This dramatic ascent, which saw the share price climb from $4.36 to $6.01, has not only rewarded patient investors, but has also brought significant attention to an early prediction made by a prominent trader whose foresight appears to have been remarkably accurate. This rally is a powerful testament to the potential for significant gains in even the most beaten-down stocks. The significance of this move extends beyond the impressive percentage gain. It represents a crucial technical breakout for NIO. After enduring a brutal multi-year decline, the Chinese electric vehicle maker has finally provided its shareholders with a reason to celebrate. The speed and magnitude of this rally have surprised many market participants, including both seasoned traders and casual observers, highlighting the dynamic nature of market movements and the potential for rapid reversals. What makes this particular rally even more noteworthy is the accuracy of an early call made by a trader known for their market insights. Their post, which stated, "NIO is up 45% in 2 weeks off our entry," has been widely circulated across social media platforms and trading forums. Achieving such precise timing on a substantial market move is the ultimate goal for many traders, and this instance serves as a compelling case study in successful technical analysis and market prediction. The rally has indeed caught many off guard, with both bullish and bearish investors having to reassess their positions. For those who have supported NIO through its prolonged downturn, this surge offers much-needed validation and a potential turning point. Conversely, short sellers have likely faced significant pressure to cover their positions as the stock defied negative expectations. From a technical standpoint, NIO has successfully broken out of a descending channel pattern that had been exerting downward pressure on the stock since 2021. Such pattern breaks are often considered strong signals of a potential trend reversal, indicating that the dominant bearish sentiment may be waning and that a new, more positive phase could be beginning for the stock. The $6.24 level has emerged as a critical point of reference. If NIO's stock can maintain its position above this level, bulls may begin to target higher price levels, potentially ranging from $7.50 to $9. However, a failure to hold above $6.24 could signal a reversal of the recent gains, leading to a retest of lower support levels and potentially invalidating the bullish thesis. Encouragingly, a support zone has formed in the vicinity of $4.30 to $4.50. If buyers continue to defend this area, it would suggest that the current rally is not merely a short-term speculative move or a temporary short squeeze, but rather the potential inception of a more sustained upward trend. The ability of the stock to hold these levels will be crucial for its future performance. This significant rally is not occurring in isolation. It coincides with broader signs of life within the entire electric vehicle sector, particularly among Chinese manufacturers that have faced considerable headwinds. Discussions surrounding potential new government incentives and improvements in domestic demand in China could be acting as catalysts, capable of rapidly shifting market sentiment. Despite this positive momentum, NIO still faces considerable challenges. Intense competition within the EV market, the ongoing pursuit of profitability, and operations within a dynamic and sometimes volatile market environment remain significant factors. However, the market often looks beyond immediate challenges, beginning to price in expectations of future improvements and growth. The coming weeks will be pivotal in determining the true nature and sustainability of this rally. The key question is whether NIO can consolidate its gains and build upon this momentum to prove that it is indeed turning a corner, or if this surge will prove to be another temporary upward fluctuation that ultimately leaves later entrants holding depreciating assets. Currently, the stock is positioned at a critical juncture, a make-or-break level. While the trader who identified this move early deserves recognition for their insight, the real test lies ahead. The market will be closely watching to see if NIO can sustain this upward trajectory and demonstrate lasting strength, or if it will succumb to gravitational forces that have pulled it down multiple times in the past. Can NIO maintain this incredible upward momentum and prove it's more than just a short-term surge? Stay with us as we explore the possibility that this Chinese EV giant could nearly double its value, with eyes set on a major long-term target. NIO stock poised for major rebound, target price suggests near doubling. After a prolonged period of significant decline, during which NIO's stock plummeted from a high of $66 to under $6, the Chinese electric vehicle manufacturer is exhibiting promising signs of life. A recent technical breakout from a persistent downtrend has ignited optimism among traders, with some analysts projecting a potential rally of up to 90%. However, achieving this ambitious target is expected to be a gradual process, likely unfolding over several months rather than weeks. Currently trading around the $5.86 mark, NIO stock has posted a respectable 9.4% gain over the past week. While this figure might seem modest in isolation, it represents a significant positive development for a stock that has experienced a near freefall since its peak in 2021. Any upward movement is a welcome sign for investors who have weathered considerable volatility and losses. The primary driver behind the current optimism is the stock's clean breakout from a descending channel. This technical pattern is often interpreted as a signal that the most intense selling pressure may be subsiding. Adding to this positive outlook, NIO is currently holding its ground above its 50-week moving average, which appears to be functioning as a solid floor for the stock price, providing a base for potential further advances. These technical indicators are not merely random fluctuations. They suggest a potential return of institutional interest. When stocks that have been heavily sold off begin to respect key technical levels, it often indicates that larger market players are quietly accumulating positions, anticipating a future recovery. A key focal point for experienced traders and analysts is NIO's 200-week moving average, which is currently situated at approximately $11.10. This level represents a significant potential upside of nearly 90% from NIO's current trading price. Reaching this target would signify a substantial recovery from its recent lows and a potential reversal of its long-term bearish trend. The underlying theory supporting this potential rebound is straightforward. Asset prices have a tendency to revert towards their long-term averages, particularly after experiencing extreme price movements in either direction. NIO's dramatic crash from $66 down to its current levels certainly qualifies as an extreme move, and the rubber band effect suggests that a snapback rally is plausible. However, investors are cautioned against expecting immediate fireworks. Savvy market participants understand that recoveries of this magnitude typically require time to develop. The consensus suggests a timeline of months, rather than weeks, for NIO to potentially climb back towards the $11.10 target. Crucial to this progression will be the stock's ability to consistently hold above established support levels and the broader market conditions remaining favorable and cooperative. For patient investors who are willing to tolerate the inherent volatility associated with such turnaround plays, NIO's current technical setup appears increasingly attractive. It is important, however, to remain mindful that the company operates within the highly competitive and dynamic Chinese EV market, and further challenges and volatility should be anticipated along the way. Could this be the start of a major comeback for NIO, potentially doubling its value? That's all the top stories for today, but stick around for a quick recap and how you can stay connected. And that's a wrap on today's explosive news. We saw NIO stock catch fire with pre-market gains, then smash through a critical 20-month technical barrier, followed by a stunning 45% rally in 2 weeks, and the potential for a near 90% rebound is on the table. If you found this update valuable, smash that like button, subscribe to Electro Drive News for more, ring the notification bell so you don't miss our next episode, and let us know your thoughts in the comments below. For even more insights and real-time updates, follow us on all our social media channels. Thanks for watching.